Before we get started, please let me see here. Oh, I better get that up here just a quick second here. Be right with you. So please read the risk disclosure statement that I've posted. It's very important to understand that what I'm going to be showing you today is regarding futures trading. Futures trading is very risky, like all trading essentially, but only risk capital should be deployed for trading, and risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. So just remember that and always have sufficient capital to trade with futures. Well, today's an exciting day, and thanks for joining with us. We have a special webinar that I'm going to present. It's what I call an audit webinar. We use audit webinars every now and then to go over all of the signals that were set up. And particularly today, I'm going to be doing an audit on crude oil, which is just an absolutely amazing contract for trading with Boomerang Day Trader. Day trading with crude oil is one of the, shall I say, and I almost hate to use this word in the futures market, it's one of the easiest systems to follow. I know that because I've looked at just about everything that's out there, and we have a very wonderful and easy system to follow on crude oil. That doesn't mean trading is easy or that the future market is easy. I just think that the method for trading with crude oil I'm going to show you today is very easy to learn. In fact, I train the method live 3 to 5 times a day in my Day Traders Action Live room. So you're always welcome to join us there and get live trades on Boomerang with mini NASDAQ and also on the crude oil. What I've got here is a crude oil chart that I'm going to be going over you with a second. Up here, we're just seeing the market come to a close. For some reason, they got a big blow up, 346 Dow points today. Absolutely astounding. Big up bullish day. A little bit surprising, but it might be because of tomorrow's rollover on the contract, not the crude oil contract, but on all the mini stock index contracts. Usually the option X or the rollovers tend to be a little bit on the bearish side, but this could be because of the upcoming meeting next week with Kim Jong-un in North Korea. Very positive development. Maybe that's it. I've been kind of puzzling the last couple days why they're not making a normal pullback after an extended move, and instead of doing that today, they came in and blew the market up to the upside. That's great. Good for the market, good for our portfolios, right? Anyway, this is information that is not relevant to today's webinar, but it is relevant in terms of if you're trading the markets. No matter what contract you trade, it's always nice to have what I call up here is called the high five. The Dow Jones Industrial Average, the Composite Index, these are cash indices. Transportation, trend, and the advanced decline line. The advancing issues declining on New York Stock Exchange, and the total net, which was only 877. Not that bullish for such a big move, but you know what? There's sometimes trying to figure out the U.S. stock market is like playing a chess game with a master chess player. You go in there and you apply your best stuff, and it works out really well for us. We have a tremendous amount of winning trades in our Day Traders Action Room on the mini NASDAQ, which is what my favorite contract for day trading, and we have signals on Boomerang for the crude oil. In our room, we have a 2 year, approximately year and a half to 2 years of tracked records on crude oil showing an approximately 90% winning trade ratio. Now, I know that sounds a little astounding, and I'm going to prove that to you today. What I'm going to do right now, this is today's coming into the close on crude oil. Crude oil had a big ramp up too, but it did sell off recently from above 70 bucks, so it's still trying to snap back a little from that. What I'm going to do is just kind of like shuffling a deck of cards. I'm just going to take this scroll bar on the bottom. I've got this set to about 15 or so. I want to do an audit today. This is going to be a special webinar where we do an audit. So I'm going to go back and audit like 14 sessions. Now, I'll be talking about that more in a second here. But as we get started, just kick back and relax. This webinar here before we go into Q&A session will be approximately an hour because I'm going to have to start a little slow to do the audit, show you the setups, exactly how it works. And then once you know that, and you see me repeat it a couple times slowly, and I'll start speeding up and going through the trades, and you'll be going, wow, look at that. It's just standard cookie cutter method that he taught us, working over and over and over. And that's why I'm showing it a special webinar today because I like to say start a career in crude oil trading. If you're going to start trading, you know what my suggestion is? Crude oil with Boomerang. Now, one reason is that crude oil is one product, right? One product means, yeah, there's news that comes out. Like today, for example, there was the regular Wednesday 10:30 Eastern Standard Time report on crude oil, and the price jumps and flips out all over. We have an exact way to handle that, which is something when we get to it here in the audit, I'll tell you about it. But it's pretty much you just stand aside from about 10:15 to about 10:45. Just stand aside and let it all wiggle its way around. Usually it's very dramatic moves that'll occur and all that, but not to worry. Boomerang works its way around it with very simple rules and the things I'm going to show you today. But look at this. Work at home. Your commute to work is about 2 to 3 minutes down the hall or up the stairs to your trading office, right? That's all you need. You should have a nice computer set up with a couple of screens and all the key ingredients you need to really understand. But ultimately, all you need is a Boomerang chart, live data feed, and our recommended broker for Boomerang Day Trader is NinjaTrader. If you're going to use Boomerang, we sponsor Boomerang on NinjaTrader, which was the absolute best uh, data feed service to use for putting Boomerang out there, hiding our code, and keeping all of our secrets intact, whereas that was a little bit difficult with some of the other vendors. So we use crude oil or Boomerang for crude oil and any other contract really that you want to use. We recommend trading with NinjaTrader. If you have another broker and you want to use that, you can just use the Boomerang chart, stack up your entry platform next to that, and take the trades right off the chart anyway. So either way is fine. But with NinjaTrader, you can trade right off the charts. Now, one thing, and you're going to see this today with your own eyes as we do a very extensive audit. Now, this first part of the webinar is going to be a little explanatory, and then as I get cooking, things will speed up, but you'll see, be right before your eyes, all the setups that start occurring. And I'll do some overnight Globex one because, yes, indeed, crude oil trades round the clock. So if you got a work schedule that you have, you can always go and open up crude oil and at least knock off a couple trades before or after work. Don't recommend doing it on your lunch hour because you need enough time to let the market go where it wants to go. You can't tell the market where it's going to go because you want it to go there. You got to let it go where it wants to go. But just a thought, you know. And if you want, you can trade all night and get up and take the day off and do other things. It's up to you. But it's the easiest to learn proven method that I've ever seen in the industry. Now, I've been in the industry for 30 years. Most of you know me, so I forgot to mention my name is Mohan. I've been in the trading industry for 18 years, moving towards 19 very quickly. Isn't it fun how time flies? Wow. You look at those gray hairs in your head and you go, holy smokes, what happened? I was walking or running down the beach literally in some exotic island just a short while ago, and all of a sudden here I am. However, my exotic island rainbows turned into rainbow colored screens on the charts, and that's what my real passion has been for the last 30 years. But it's definitely always good to take a vacation. But throughout the industry, I have seen so many things come out, but not one single thing. And I've got a lot of our trading friends that work with us here, thousands that have joined our services, and I say it to them and I'll say it to you now again. Anybody who's seen any other system anywhere even close to comparable to Boomerang, please let me know about it. And I've put that word out for the last 10 years, and I have not got anybody come back and say, look at this system. Boy, this really is good. Nothing. Even if it was average or whatever, I'll look at everything. I love this industry. I love seeing people make things and develop things, but no one has developed anything as accurate and as profitable that I know of, or the people that I've worked with that I've put out the word to. And as I'm putting this out now, as it'll go out to thousands of other traders, let me know, but I have not seen anything as accurate and easy to use as Boomerang. Now, what do you want in a system? I just said it. Something that is very accurate and easy to use above all. Whether you're a seasoned pro or a beginner, the easier it is to use. You already got the markets flying all over the place. Do you need any more complicated things? Do you need 20 different rules to figure out which setup to take and all that? No. Easiest to learn, proven. That means been around a long time or a while and proven. That's Boomerang. Been around almost 10 years now. The crude oil method we track in our live room every day. It's proven winner, 90% winners. I'll show you that pretty soon here. Over a year and a half, we've tracked them live in the room with no losing sessions on the crude oil signals that have come in. None. It's pretty amazing. That's something right there that's very rare in our industry. But again, we prove it, and I'm going to show you again today. 3 to 8 trades a day average in the 4-hour period of time, which I consider to be 15 minutes for the crude oil market opens at 5:45, which is quarter to 9 New York time. And you want to stop trading probably around 1:30 Eastern Standard Time. A little the market starts really winding down pretty much after 1 to 1:15, 1:30, somewhere in there. During that time, we have seen an average tracking this over a year and a half, following the exact method I'm going to show you today, an average of about 3 to 8 trades a day. Now, on the crude oil, this is a scalping method. We're not looking to catch the big move, and boy, crude oil make a lot of big moves. But as a scalper, you have to develop the mindset that I want the easy money, and we're going for 8 to 10 ticks. That's all we're going for. But if that occurs 3 to 8 times a day, you're putting an $80 to $100 bill in your pocket 3 to 8 times a day. Can you imagine? I mean, that's a dream come true, going to work every day and putting a $100 bill in your pocket 4, 5, 6, 7 times a day. That's a nice paycheck. That's $300 to $1,000 a day on just one contract. That's up to $100,000 a year after commission, because we got to factor in commission. You shouldn't pay more than about $4.50 a round turn on the crude oil. But get this. You're using a $4,000 to $5,000 account, a small account, to trade the one crude oil. The day trading margin on crude oil is about $1,000 at most brokerages for day trading. You're in and out during the day, no overnight holding. You want to give yourself a raise? Start trading 2 contracts, and all of a sudden this doubles. We have traders in our room. I don't want to frighten you or anything, but some of them do a lot more. Dare I say, I'll just tell you, some do 10 contracts on my signals that come out of Boomerangs. Some do 5, 4, not uncommon. But if you're trading one and you're making up to $100,000 a year, you've seen it happen, you're getting pretty excited, pulling in that kind of dough, you want to raise the bar. Just simply move your meter up wherever it is on your chart from 1 to 2, and whenever you make an entry, boom, just take 2 contracts. That's one way to work it. Give yourself a raise. So, and you wouldn't have to change the account much, because if you got 4 or 5,000 in there, so you're trading 2, that's 2,000 margin. It just depends. Talk to your broker. They might want to have a little more cushion, but not that much. And if you're making that kind of dough, then you don't have to worry much about it, do you? You got it made in the shade. But I'm not going to promote or sit here and tell you that crude oil is a piece of cake, trading's easy. Only risk capital should be used. We already talked about that, and you got to realize this is futures trading. The risk is very high, but following our methods, I'm going to show you, in fact, today, our method for stops, because many of you are thinking, well, what's the stop? The stop on the crude oil method we use is automatic 13-tick stop. You put that on a bracket usually. That way when you make one click and you enter the amount of contracts you want, you're automatically putting a bracket for that same amount 13 ticks above it. Don't trade without stops. There's no point in taking that kind of risk. But I'm going to show you our method for stops today, which is so beautiful because we average about 3 to 6 or 7 ticks on the stop, and we rarely get stopped out. It's very rare to see that happen. It can happen if the market gets really kind of nutty and whipsaw based, but generally because the trades we're taking are in line with the bias that we're trading, you'll see the market force is on that side of the trade. So we got a lot of safety. You can trade Boomerang crude oil around the clock. It's very easy to learn, as you will see, and it's a simple scalp system that trades on the exact side of the market force that's setting up. Okay, so I wanted to go over that with you, and let's move on here and get started. So what I'm going to do first of all, and then we'll get to your questions and things later too, if you'd like. You just relax here as we get started. I'll show you. So I'm going to start out slow in the first day. I'll do a whole session real slow, showing you the exact rules, and then I'll speed up kind of to hyper speed, not for any reason, but I just don't want this webinar to go too long. But I do want to show you a large sampling of contracts. Okay, so starting at 5:45 every day is where we're going to look for trades. I'm not going to do Globex right now, but the crude oil works beautiful on Globex, like I mentioned. We will do some later, but I want to kind of soar through this now. So watch here. I have to use the cursor because I need to monitor prices and different things. So don't mind my cursor. I believe you'll see like a yellow dot around it or something. Anyway, don't worry about it. It's just so I can really nail the price and show you the levels. All right, so 5:45, look what happens here. The first rule of crude oil on Boomerang is this. We watch for a buy or sell channel open up, and that's with this arrow will come on and it's alarmed. You can set one of 6 or 7 different alarms, whatever you like, a quiet, simple one or one that's in your face. It's up to you. You really just need a nice simple alarm. Choose the one you want. And we wait for that candle to close. Now we're using a standard for Boomerang default 450 tick chart on crude oil. This is the current month, which is July 2018. So these charts that I'm showing you should all be pretty in line with that July contract. Should be fine. I don't have to change it or anything. So what we're looking at here is you watch for the candle to open, saying there's a new Boomerang sell channel opening up, and you wait for the candle to close and that arrow lock in there. So here's the 4 steps, and you can write these down if you want, but first we ask ourselves, are the price pressure bands open? Now these are the price pressure bands here. This is a special indicator that I developed. It looks like sort of like Bollinger Bands, but it's sort of like mega Bollinger Bands because it not only tells you when the pressure's on the market, but it also which side, and it tells you it's a confirmation indicator when to get in the prices. Now, at first the rules may seem a little bit complex. You might scratch your head a little bit. Don't worry. Once you've watched me train them 3 or 4 times, they'll be like, you know, you could do it in your sleep practically, speaking as a slogan. Sleep, do it in your sleep. Chew gum at the same time. Walk and chew gum at the same time. That type. So what happens is we watch for this cobra here to cross. This cobra is this dashed or this dotted line. See that running up through here? We watch for the cobra to cross this thin orange line. That's the orange line Boomerang filter. So you see that's crossing under the orange line filter, and number 1 is watching the price pressure bands to see that they've opened. Now in this case, they're not quite open on the sell side yet. They opened here on this candle. However, you can trade this. It's kind of a little bit different setup starting right out, which kind of wish it wasn't, but that's okay. It'll all work out as I start flying through these. You'll see they're all the same setups. When the Cobra crosses under that, and indeed crosses under this thicker, we have 2 bands here called the dynamic trend bands. This is dynamic trend band number 1, the dashed dotted one, and the one that's solid, that's number 2. If the Cobra crosses under number 2, and the bands have crossed one of 3 conditions. They've crossed, matched color, or are within 2 ticks of each other, right on the verge of crossing over. That qualifies a trade irrespective of the price pressure bands being open, because this is the rule number 4 is the or the dynamic trend bands following one of those three conditions. So if you start a trade out with that, you're already good to go. You don't need the price pressure bands to match necessarily, but we'll get into a trade where you'll see how they do become an important factor. So this trade right here, as of this yellow dot, now Boomerang will mark in a sell channel pullbacks to the signal line, which is this very thin line here. And it'll, from the first candle, 1, 2, 3, 4, 5, 6, it'll mark up to 6 pullbacks to the signal line, and after that it won't mark anymore because the trade's already ran by then. Usually you don't want to get in much past the first or second or third, but we'll follow the rules and I'll show you how that works. So this trade, as of right here, is good to go for a move. So as you see this happening, and you'll get a very sharp eye for this, very easy to notice. You trade a pullback signal line, which is at $72.58, and the prices running a little bit of pressure on 58. We'll just use the last two digits. 58 jammed up to 60 and then crashed. And 58 crashed right down here to 46 in this one candle. That was 5:58 and 48 seconds. This all happened, this little mini crash right to hand you 10 ticks, happened in under 2 minutes. That's because Boomerang lined up the trade with all the price pressure on that side of the market. So you're not sitting there for an hour. You get in that trade and right there gave you 10 ticks. So what I'm going to do, because I'm doing an audit today, I'm going to mark all these trades so that you'll have a good idea how many trades occurred on each day and all that. But there are an average, I can tell you already, of about 3 to 5 genuine setups that occur. 3 to 6 actually is about the average. So this is the first one here. I'm not going to use the dates. I'll just use the dates from, it's from I believe, yeah, I'll check it later. I don't want to distract us right now. So there's 10 ticks right there. Now the second setup, and I'm glad there's one here, so the prices come down because it shows us what's called a second level trade. This is trade number 1. Well, actually this one's what's called a reset. As long as the dynamic trend band number 1 stays on the same side of the Cobra, it may change colors, but that's okay. But if it crosses over, then it resets the pattern. Now this is not a buy pattern because the steep slope of the dynamic trend band number 1 to the downside prevents you from taking that. You need either a flat, like here, you see how you need a flat dynamic trend band number 2 or one that's sloping down, and in this case changed colors to the magenta bearish color. This is not a trade, but this is an alert for watching for the next trade setup. It could be a buy trade if this flattens out, or it could be, in this case, the sell arrow opens up. The dynamic trend bands, you see, are already matching color on this pullback signal line. So your entry is 41, which drops right down to 30. On the very low here, drops down to 32. So there was several opportunities to grab 8 ticks on here, and that's why we say 8 to 10 ticks. If they go down and tap 8 ticks like they did right here, see that? You're 41, you're short. They come down here and they tap. You want to just grab that 8 ticks. Doesn't matter. And if you hit them at the market and you get 6, 7 ticks, 8 ticks, maybe 9, that's not the concern. The concern is to just go in and grab the 8 to 10 ticks out of that move. So I'll mark a +8 section here, and we'll show that as a +8 tick trade. So already you've got 18 ticks or $180 just in the last half an hour of trading on this particular session. So the market moves ahead, and it goes, choppy here. There's still no trade, but you remember we have the crude oil, or the dynamic trend band is crossed over here on the upside. Now it's back flat on the dynamic trend band number 1. The choppiness comes down here. Now, we don't take third level trades, and this refuted that anyway because it was a counter move. But these aren't trade setups, not until you have the right setup on the price pressure bands, and ultimately the dynamic trend bands is the final jury on that. So what you have now is you have a new buy channel comes in, nothing here. A new buy channel comes in, and the dynamic trend bands are matching right after this candle closes. That's why you wait for that candle to close. And on the first pullback here, the dynamic trend bands are matching, and especially, and they've crossed and matched on this second one. So we'll use the second one as the example. 39 jumps up to 48. So there's, see 48 up there? There's 8 ticks right there. It was actually 9 ticks. So there's 8 ticks. If you weren't fast enough and missed it, they pulled back a little, just a couple ticks below your entry at 36, and then they shot up again. So I'll mark that as an 8-tick winner. Not a problem. And then the market soars higher, but we could care less. Very frequently with crude oil, because we're just scalping that little move, trying to get our $100, $80 to $100 bill. Yeah, they're going to run substantially. Crude oil is very well known for having tremendous runners in the market, but we don't care. You get the scalper mentality, you go to work, and you're just looking to make that 8 to 10 tick trade 4 to 5, 6 times a day. It's a nice paycheck. And if you just want to make 2 or 3 trades, then double the contracts and make the same amount of money in half the trades. So here they go, coming in here. Very choppy, range bound. Now, one of our rules too is if the market makes a large extended move, always expect the reversal to be full of choppiness, and that's what happened here. And then they pushed them a little higher, but because they'd already done this, and we have the cross under right here, so you have the dynamic trend band under the dynamic trend band number 2, which promotes the sell side, and then as they come up here, they cross back over. There's no trade in here. There's nothing in here to do. You're just waiting. And look what happens. A new sell channel opens up. Now here's the classic case where the right on this candle, the price pressure bands open up with this dashed line crossing under the solid line, and the dynamic trend bands are squished together within 2 ticks. You can see 85. This is why I need the cursor here. 85. They're within 1 tick. That and the cross under of the orange line, notice how the cobra is under, it's tapping or under the orange line right here. So your trade would have been right here at 80, and if that happened too fast, you could got them here at 76 as well. And either way, whether from here or from here, it produced 10 ticks. You see 75 coming down to 64. Boom. Hard, fast move on the sell side, on the same side of the price pressure. Isn't that great? So right now, so far, you've seen choppy periods in the market and what not to do. You've seen a move that we captured going long after an extended move. You've seen a short move for a quick 8 ticks. The conditions for an up move that if you caught 8 ticks here or they pulled back. So in other words, we've had 3 trades within this period. Then you saw one take off. We don't care. Don't let the markets. We have a very simple slogan that I use all the time, and you got to learn it and tell it to yourself all the time. We use the markets to carve out a paycheck every day. We don't let the markets use us by driving us crazy, which it will with, oh man, I got out with 10 ticks. I would have, should have, could have just let it run. I could have made so much more. Those are the beginning traders. They all do that. And you even go through it when you're a little older too, like me, and you've been trading a long time. But you got to get over that as quickly and early in futures trading as you can. It'll drive you nuts, and then you'll start you'll break your rules and try to look for the big move. You'll move your stop, you'll get hammered, and 3 accounts blown out later, you'll start wanting to buy Boomerang and follow a proven system and just make money. I learned this from floor traders in New York back when the New York Stock Exchange had a contract for the stock index called the knife. New York Future Exchange, we affectionately call it the knife. It can slice you a big piece of the pie, or it can slice your, well, you guess. Anyway, so we just did this trade, third winning trade in a row. Just a real quick review from 545. One, second level trade two, third trade, which you caught 8 ticks here. If not, you held. They crossed over, so you're good to go. Their price pressure is going to be on the upside. And number four is actually the fourth trade that we just did, showing the price pressure bands open, all that. Believe it or not, we've already covered the majority of the trade setups for Boomerang. That's all there is to it. You think you could learn that? You're darn right. It's very easy. And I'll get into this a little bit later, but if you decide you want to buy Boomerang, I will offer you a free 2-week period in my trading room where you can see it trade live, and you can get trained on how to trade with crude oil live if you wish. It's a bonus part of the deal. Well, so this one sold off, and look what happened. They went nuts. They got all choppy and full of whipsaw, and that's okay. We're up 3 times 8. Let's see, we're actually up 2 10-tick trades and 2 8-tick trades. We're up 38 ticks, $380 per contract minus commish. Let's keep going here. And then I'm going to speed up because I'm training you now, and then I'm going to speed up and show you. It's going to be a little fast. I'm not doing that for any reason other than to reduce the length of our session here. Because that's all that matters here, is showing you a lot of samplings of how this works. So you see the methods over and over. We're missing one trade setup, but I'm pretty sure that'll show up. It's called the modification rule. After that, that's it. You know Boomerang already. Wasn't that easy? So this trade panned out, and now you go over here and you see the dynamic trend bands crossing, but look at the price pressure bands. They're flat as a pancake. They've crossed over, but this is what you want to see. See how they cross under, and they're holding lower, and everything's crossing over. That's price pressure there. This is a flat market, and one of our rules, don't trade against a flat dynamic trend band unless you see, you have to have the 4 steps. And that we'll do on this next trade. There's no trade here. Next trade, though. Okay, so we see a new sell channel open up, right? Yes. Are the price pressure bands open to the downside? Yes. Step number 2, has the Cobra crossed the orange line? I'm going to start speeding up now because you already should know these rules. Hopefully most of you wrote them down. The answer is yes. Are the dynamic trend bands in one of 3 conditions? This is rule number 3. Crossed under on a sell or over on a buy, matching color, or squished together within 1 or 2 ticks of each other. All 3 of those are yes here. You go short right here at 76. They jumped against you. Welcome to the wonderful world of trading. It jumped to 84. Not a problem at all. You're monitoring the orange line for a mental stop, and they quickly came back down, and 76 dropped right down to 60. 10 ticks, and that's now 5 winning trades in a row. Nothing stopped out on Boomerang on this particular day. Now, what happened here? Of course, you got your 10 ticks here. Woulda, shoulda, coulda, held them. No, just forget about that. It doesn't matter. Let me tell you a little secret. When you get real good at Boomerang, because I do this myself, and I know I get a lot of emails from our traders. We have thousands of people who own Boomerang, trade with it. When you get real good at following the system I'm showing you here, you'll know intuitively. You can follow the price pressure bands, the dynamic. You can follow all our tools, and you can hold these longer, but I don't want to teach you that. I want to teach you the core method, and I have trust and faith. I know if you're a smart person, a smart trader, what's going to happen is you're going to see a lot of these bigger moves, and you'll say, I'm going to go for 15 ticks on this trade. I'm going to go for 20 on some of them. You'll know. Anyway, So next trade, is this a buy trade here? No, absolutely not, because we went over that before. This this is too steep of a downside slope. There's no crossover, and already just a little pop up, you got a gray candle coming back in. This is going to give you a warning sign of a second level trade, which we already did one of those. So here it comes again, same old routine. But to do a second level trade, you must have the counter arrow, which is a signal coming from Boomerang algorithms. When those algorithms come in and change the arrow, that's good to tell you that maybe the upside will start getting going, but this is not a correct trade. You'd wait for the second setup, but most likely on a steep sloping downside dynamic trend band, you're going to watch for a second level trade. So as soon as you see that counter arrow go back on the sell side, you take the next pullback to the signal line at 51 or 46 was way down here, but you take the immediate next one because you're already in the sell force. You don't even need the price pressure bands to open, although they opened right here on this candle. So say you took this one, the lower one, 46. Doesn't matter because 46 drops right down to 30 like a lightning bolt, and you got your 10 ticks. What happens with the 8 to 10 ticks? Usually, I would say about 70% of the time, from my experience watching this method for over a year and a half live almost every day the market's open, 70% of the time it's going to give you 10 ticks. The market on that side of the force, because crude oil is a very fast moving counter, and it's going to jam right into 10 ticks. Don't set a limit though. Use your limit, just use your market. Let me show you that real quick. Just we buy them at the market or sell them right when they hit the yellow dot. You can squeeze a limit up to the dot if you want, but in most cases, get ready to go to market. Just use market orders. If you get 8 ticks, 10, sometimes you're going to get 11. Sometimes you'll get more because if you get out at the market, um, sometimes they'll crash right through that 10 tick and give you more, and then close them out. And that's it. That's all you got to use. You don't have to complicate your trading life. Yeah, we got a wrong one here. Just a quick second. There we go. So there's another 10 tick trade. Now what happened here? Notice how the dynamic trend band kind of snuck over on this side of the dynamic trend band number 2, and they came in here and matched colors, but notice how flat both dynamic trend bands are. Yeah, the price pressure bands open up, but just to show you how cool Boomerang is, and I won't track it until right now, but look at, they crossed over, which, says the upside is going to get some pressure, even though this is not a correct trade because of the super flat DTB and flat dynamic trend band, DTB number 1 and 2, still, this first pullback to the signal line at 37 jammed up to, you guessed it, 48. There was a fast 10 ticks there. I'm not going to count it because this was an extended move here, a second level move. It's an extended move. Usually you want to let that settle out and let the market kind of figure out where it's going to go. And in this case, this is a reset of the pattern. So this technically is a sell trade here because you've got a reset pattern that shoots back to the sell side. Now these can often be tricky because you just had an extended downside move. So you'll learn a little theory with Boomerang, and you'll learn what I call common sense. It's just common sense. Be a little careful on this trade. However, if you just condition yourself to mechanically follow the rules, you don't have to worry. You're already up $600 or approximately 600 for 10 tick trades, 2 8 tick trades. So that's 440 and 56. That's $560. So if you get stopped out in one, big deal. You're going to get about 90% winning trades on crude oil following this exact method. So say you see they're matching, this is a reset. Maybe you think, well, they've already made a big run to the downside, but I'm going to take this trade anyway, and you go short here at 30. Well, 30 pops up to 39, which is a little disturbing, but That's because the market's trying to switch sides a little bit here. Even so, if you took this trade, maybe you would have tried to get a little better price or ignored the trade. But either way, look how 29 gets smashed back down to the downside again. And that's boomerang for you. It just, once these indicate, notice I haven't mentioned any of our bias indicators either down here, which can be used as additional filters when you're taking a trade. Look, like here, for example, all those bias indicators, you're just looking for red color on the bottom one, that's the market force indicator, green on top for buys, and the histograms to generally be under the zero line, whether they're yellow colored or red, it doesn't matter. So because this was right on the neutral line a little bit, yeah, they popped higher, but they ended up crashing down lower and giving you that trade. Well, let's do one more because we're coming into that period around, which is this is a West Coast chart, 10:30, 20 to 11 my time. You want to start kind of wiggling out of crude oil because you're getting a little late in the day, getting closer to closing time, and that's just a better time to stay outside of the market, especially if on a day like today where you had so far on this particular day, we had 9 winning trades in a row. Nothing got stopped out. But look at this trade here. Let's follow the rules. Okay, so they've been worked. The downside's been worked pretty intensely. You got a new buy channel opening up here. You got the price pressure bands open. They're a little flat, but they're still open nonetheless, right? They're still open. You got the Cobra right here crossing the orange line filter. That's rule number 2. Remember, rule number 1, a buy channel that opens and closes. Crossover here. Yeah, they're open. They're still moving up, so this is kind of okay. A little bit shaky, but it's okay. The Cobra now has crossed the filter line here. And once you see that tap there, you go down here and you measure real quickly 8 and 6. 2-tick spread here, very tight. You can trade this pullback to 16 and 16 jams right up to 26. Now, if for any reason you missed this or you just didn't feel it was a right on setup, this is good because this shows us what's called the modification rule. And I've been wanting to teach you that, and now we have a chance to do that. The modification rule says if the trade setup is not there, and after the buy channel in this case opens up, all the pullbacks of sig line are used up, but then you end up still getting a crossover with the matching dynamic trend bands, that qualifies the trade to be taken by trading a pullback to the Cobra. You just simply use the Cobra as the default place to buy the pullback, and that's at 18 here, and 18 shoots right up to 29 here practically as soon as you get into the Cobra with the dynamic trend bands crossing. Because remember, once those cross in that direction, there's going to be a lot of force on that side of the market. 18 jams up to 29, and that's the final 10-tick trade of the day. Now just real quick, because we're going to speed up the audit very quickly now, and it's taken a while, but I had to teach you all this stuff. That's 7 10-tick trades plus 2 at 8. So that's 70, 88 ticks. 88 ticks. I'm just going to do the math for you here. 88 ticks, no losers. 88 times 10 bucks on one contract is $880, right? And you got 9 trades, 9 winning trades, 9 times $4.50. Remember earlier I said that's what we use to measure the commission. That's $40.50, so I'll round that up to 41. And so we subtract 880 minus 41 bucks, and your net is you made $839, practically paid for the entire boomerang the first day, which is $11.95. I'll talk more about that later. But what I'm not trying to sell you boomerang. I'm trying to sell you on yourself. I'm trying to sell you on proving to you that we just showed you the first day made $839 on a small tiny account where you only used $1,000 margin. I mean, if you're one of these percentage type folks, which I don't think for futures is that important. We're about cash on cash, but $839 is what you made. Now remember, you only used $1,000 to buy that contract. You made 83% return on your money because the margin's only $1,000. That's all you had to put up. If you remember the exchange, you don't have to put up margin in most cases. You just trade. They know you and they got all the information on you they need. So I'm saying, but as regular traders like us, you have to put up margins. So you open an account with a certain size, but the amount that was actually used to trade those 9 winning trades was $1,000 on each trade. So your net gain was 83% on the $1,000 you used. Now, if you don't understand that, I'd like to take time to explain it to you, but I've got a real simple metaphor that helps explain that, but I won't use it now. Okay, so now we have literally in that first day with 9 winning trades, which I just randomly grabbed the day. I don't even know what date it is. I'll have to look back. I don't even know what day. I just randomly grabbed it, started this webinar today, and that was the first day. 9 winning trades, a tremendous return, no stop outs, which I'm glad to report. And just forget about these trades. It's getting later in the day, but you can see there's another winning trade here and another one here. This is after crude oil, I believe, trade closed. And just slowly cruising over Globex. Now we're gonna speed up on purpose, not for any reason other than I want to get through this. But let me show you Globex real quick. Winning trade, no trade, winning crude oil trade here, winning trade here as the Cobra crosses under. Maybe here, probably, no, this happened too quick. Skip that. Wouldn't be a winning trade, but you can see the price pressure driving the price in there. Here's a winning trade right here for 10 ticks. Here's another one coming in here. See the matching dynamic trend bands, 10 ticks there. I'm going to do it a little different on the regular hours as we're rolling into that now. Choppy period, whipsaw, just stand aside and wait. They're getting ready to open. Quarter till. They open at 6 my time, 9 o'clock New York on the New York Mercantile Exchange, but we trade at 5:45 going forth. So after 5:45, and it can be a minute, 2 minutes or so early. I mean, it doesn't have to be exact, but ideally after 5:45, and look what happened. Bunch of whipsaw coming in. They crossed under, the Cobra crossed under the orange filter. What was the spread, right? On this candle, the spread was 89 to 90. 1 tick spread there. You go short at the market, 85. 85 collapses to 77. Day number 2, first winning trade for 10 ticks. You with me? That happened right as you started getting going here. Right after 6 a.m. my time, 9 o'clock New York, right after the market open. There's a quick sell. Then you come over here, buy arrow, price pressure bands open, dynamic trend bands are already matching, so it automatically you buy the pullback to the blue dot. 88 choppily jumps up to 96 here for 8 ticks, and then jumps further and finishes off the 10 ticks. Second winning trade in a row. See how much faster we're going now? We got to. Can't sit here all day. Now that I've showed you all the setups, you'll see them repeating. Look at here, classic. Level 1 trade, counter move. You got to have the arrow that shows up and closes on the candle to set up a second level trade. New buy channel, trade the next pullback to the blue dot in the up channel. 94 jumps up to 7,200 even. Herky jerks around a little and explodes higher, gives you the 10 ticks. You had to wait through it. Some of the trades are going to be a little hard. That's the third winning trade so far in a row on this session. Then this was obviously a Wednesday, it looks like, because right at 7:30, notice the crash. I'm assuming this was probably a Wednesday. Excuse me, it almost have to be because of what's going on here. Pardon me, I was in my room today. We had a nice winning day in my day traders action room. Nailed 8.5 points, which is our goal on the NASDAQ. So my throat's a little raspy, no big deal. We'll get it cooking here. So now because of this, so that trade panned out. Now you got to wait for the market to kind of chill. So you notice that trade panned out right at the cutoff time, around 7:15, 7:20, 10 minutes after 10 o'clock Eastern on a Wednesday. Don't get in front of this crude oil thing. We don't know which way it's going to go. Sometimes they'll smoke them up real high and then crash them. You just wait, and then wait about 10 minutes after, which is all this. Just forget about it. Doesn't matter. And then we watch and see what. Okay, so what rule applies here? Big extended downside move. Don't look to take that first trade. You got a steep sloping downside orange line filter, sloping down magenta filter. Yeah, you have the crossover and everything. Boomerang still came in with that and produced 35, jumped up to 42, but this is not a buy trade because everything's still sloping down after a big move. Usually you got to watch and see if they're going to make a second level trade on the sell side, or you can buy the first buy sided trade. So here they come back and they start working the sell side again, but this is not a trade down here because you got the crossover on the upside. Yeah, they're matching color, but this is, if you're there live, you can see this going at hyper whipsaw speed. You don't want to go back on the sell side. Just wait. Do you want to go on the buy side? Well, you've got a new buy arrow, and as soon as it closes, they just start whipsawing to the moon here. You do have the dynamic trend bands matching, but let's see where this trade panned out. 32 jumped up to 40, so there was, right when this came in here, the dynamic trend bands are matching, which immediately qualifies the trade, but you're coming out of a heavy whipsaw phase here. You might want to wait, but if you caught this, you can see right on that pullback at 32, they jumped up to 40 or 39. So just barely missed 8 ticks. 32 came down to 23, still holding the 13 ticks, and they jumped them back up and ended up giving you, after all, very nervous trade, but 32 ended up going to 43 up here, handing you another 10 ticks on, again, a very nervous trade, but nonetheless a fourth winner in a row so far. Now here it's weird because this is kind of a, you got to learn a little market theory. This is kind of a small whipsaw first level trade, and then the whipsaw continues. See, once the dynamic trend bands cross over, you're measuring which is going to be level 2. So practically speaking, this trade here was like a level 2 up move, but it was all very tight and choppy, so kind of bizarre. But nonetheless, if you considered that that was the case and these weren't like real strong, this wasn't a strong level 1, neither was this, even though this one ended up being a winning trade after some, or this one did after being some flipping around, this would be considered a second level trade. Counter sell arrow, new buy channel arrow, pullback signal line, and there's another 10 ticks. Fifth winning trade in the row if you traded this as a second level trade, which it looks to me like it was technically. The combination of these two was like a wave 1, but it was really weird. And the markets are going to get weird sometime. They'll twist you, that's for sure. Now again though, here's an example, I'm speeding up, of a very big up move. So always use caution on the first cross under. It's definitely something you don't want to look to trade. And you can see there was no dynamic trend band set up until things started whipsawing back up here. And again, because of the fast fury and these big spike candles, you don't want to take a buy trade here. Just relax and let the market settle a little, and then sure enough it starts revealing itself. You got the classic, and you want mostly these classic trades, they're the best ones. Sell channel opens after an up move. See, this is like a completing of an up move. Crude oil is very nice, smooth contract. They go up, they go down. Unlike NASDAQ, that out of nowhere goes up 346 points. I don't know. Could be the, like I said, the meeting next week with North Korea. But anyway, so here's the market now. Sell channel opens and closes. Are the price pressure bands open? Not quite yet, but on this candle, yes, price pressure bands are open and the dynamic trend bands are matching color. If these match color or have crossed under, which they have, and matching color, all the other filters aren't that relevant. You buy a pullback signal or sell a pullback to the signal line here, go short, and down they come for 10 ticks. That's the 6th winning trade in a row on this session, and it's still, the night is still young, as they say. New buy channel comes in, a small move down, so watch for the first one to be good. A new buy channel opens up, the candle closes. Are the pressure bands open? Yes. Has the Cobra tapped or crossed the orange line filter? Yes, and crossed the dynamic trend band number 2. Therefore, I will buy the first pullback to the signal line, which is marked, alarmed, and dotted right in the chart, and you can see the signal line marker before it even gets close to hitting it, so you can watch for it and be ready with your finger on the trigger. Buying here at 61, 61 shoots up to 83 in 2 or 3 quick candles. 7th winning trade in a row. They go up, you don't care. They go up here and give you your 10 ticks, you don't care about that. You got to condition yourself to not. It's what I call the would've, should've, could've syndrome, and you got to take it serious, because would've, could've, should've, if you don't control it, you're going to blow out 3 accounts saying would've, could've, should've, and trying to follow what happens after the fact. And you're going to realize trading is about becoming a junior Nostradamus. You're betting money on a price in the future going to a certain area you want it to go. That's Nostradamus. You're forecasting the future, right? I often joke traders are like junior Nostradamuses, because we're not just forecasting it, we're betting money on it. So it's pretty amazing, isn't it? So there's the first sell channel. Look at this, classic boomerang on crude oil. Sell channel, the candle closes. Are the price pressure bands open? Yes. Has the Cobra crossed under the orange line filter? Yes, it has, as of the opening sell channel. Are the dynamic trend bands spread within a tick or two apart, touching and crossing, or just ready to cross over? Yes, they are. So here's your trade right here, right at the yellow dot at 80, and 80 squashes them down here to 68 in 2 or 3 candles. Again, these are like very fast moves. 8th winning trade in a row for 10 ticks on this session. There's still time to go. They take them down stronger. So it's a big extended move here, so you're not going to look for a trade here, and it isn't a trade anyway. Why is that? Look at the steep dynamic trend band pointing to the downside and the orange filter. There's no buy here. How about a sell? Well, this was an extended move. They came back here, but they didn't signal a second level move, so technically they're close to crossing over here, but this should still be okay for a second level trade. Let's see what happened. And if it gets stopped out, it's good. I get to show you the stop method. Sell channel opens up. Dynamic trend bands are matching, so we're just going back to the same side. And when that happens, on a second level move, you do not require the price pressure bands to be open. You just take the first pullback, the signal line at 62, and 62 comes down to the low here at 52. See that? I'm not making this up. It's a method I've tested and proven for so long before I released it. It's pretty astonishing. So it gave you exactly from 62 here on the dot down to here 10 ticks. So we're going to call this an 8-tick move, because somewhere in there you scalped 8 to 10 ticks. We'll call it an 8-tick move. It's legitimate. Now again, big downside move says probably better off just waiting. Don't take the first buy crossover. It's very easy to see what a big move looks. All you got to do is squish your chart up too, and you can see when they're big moves like these, let that second level wait. It probably panned out. This would have been it doesn't matter. You wouldn't have taken it, nor would you have wanted to take this sell, because the dynamic trend bands have crossed over after a big downside move. Sure, they're matching color again, but this is where common sense comes in. They're whipsawing like crazy. The market's trying to turn up in the opposite direction, which crude oil usually does. So you're just going to wait through this. The method is real simple. When this happens, ignore the first buy on a big downside move. Ignore the first buy set up in Boomerang, and just wait for the second level buy. And sure enough, here it comes after this one. This is technically going to be a second level buy, because this was number one. Even though it was all weird and choppy, still the crossover is there. Buy channel, first pullback signal line right here at 69. 69 comes down and moves 4 ticks against the trade, and then 69 jumps up to 80. You guessed it, right up to 80, right up to 10 ticks. That's what we want. We want the easy money. We want the easiest money as possible on the initial blowout side of the market force. We don't want to trade him up here and try to keep catching the move. We just want that initial 10 tick blast, which occurred right there. I'll mark that as an 8 ticker because it was exactly 10. Then they choppily climb higher and higher, but nonetheless, it wasn't. It was a little bit of an extended move, but it was all choppy. So that means the market's probably ready to reverse fairly easily. So, classic case here. Sell channel opens and closes with the candle locking in on top of there. Are the price pressure bands open? Yes. Dash line under the solid line? Yes, they are. Is the Cobra crossed under the orange line filter? Yes. As of this candle, it's tapped it or crossed under. Therefore, and then take a look at the dynamic trend band. Squished together by one tick or right in the vertical. Yes. Therefore, go short on this yellow dot, and 79 drops down to 69 right here for 10 ticks. There was a triple tap on 69, so you could have got 10 ticks there, and then they dropped them a little lower. 11 winning trades on this. Now this one went a little bit later, so let's back that one off. I didn't notice that till right now. Winning trade, no doubt, but this market pushed up. Once you get past, especially 11 my time, which is 11, 2 o'clock, but you want to get out of crude oil generally, after 1:30 or so. So this trade made a choppy second level move, which was actually the first legit move going here. So we can even back that one out too. I didn't notice the time I was actively involved in checking the charts because we don't want to be trading much past 1:30 Eastern Standard Time. So I just backed out the two trades. That means we have on this day 5, 6, 7, 7 10 ticks and 2 8. So that's again 9 winning trades in a row. 70, 86 ticks. So $20 without doing all the arithmetic, because it's 2 ticks less, same amount of trades, commission, everything. It's simply $20 less than the previous day, which was plus 839 after commission. This one would be plus 819. $20 less because it's 2 ticks less. Same amount of trades, same commission, 819. So in 2 sessions I just showed you, you've made, according to the exact rules and method, about $1,650. Boomerang cost you $11.95, and you made more than that in 2 days, and you still got Globex, and you own it for life. So with that in mind, I'm going to stop the recording I made here right now, and we're going to move on with some other things. So thanks for joining us today.